Hey guys, I'm interviewing a guy named Shane Perkins today. He's a real estate investor. He's got a real estate investing system called the reverse wrap that's getting a lot of attention right now and growing like crazy. And I just had to invite him and get him on the show and kind of pick his brain because real estate investing is something that I've been interested in, and it's obviously something that's never going away. It's probably one of the oldest professions next to the oldest profession. People always need a place to live, and that's never going to change. So let me introduce Shane Perkins real quick. He's a best-selling author. He wrote a book with Steve Forbes. He was invited to speak at the United Nations Global Economic Initiative, and he's been in real estate investing pretty much his whole life. Did I get that right, Shane?
Yeah, over 30 years as a real estate investor. So yeah,
Okay,
not my whole life. I'm a
good.
little older than that.
Yeah, good amount of time though. So, absolutely. So, a lot of people ask the question, well, how do I invest in real estate? And, I'm sure most people are familiar with just the traditional type of real estate investing. You buy property, you rent it out, but what's different between that and the reverse wrap, your system?
Well, a lot of people think that there's a lot of TV programs, right? These reality shows of people buying houses low and going in and fixing them up and rehabbing them and selling them for profits and things like that. And so that's real estate investing. What you're talking about too, rental properties, is more of a long-term type play where you buy properties and rent them out, and during that time that you're renting them out, you've got your rent paying your mortgage and taxes and insurance and all of those things, and there's a lot of problems that come with that with tenants, and there's bad tenants out there, and it's a long-term play. If you've got $300 or $400 a month in cash flow on a property like that, then you've got to be ready to absorb those vacancies. You've got to be ready to absorb if you need a roof in 3 years and it costs you 10 grand, there went all your cash flow. So it really is a long-term play, but it's good because you're capturing the appreciation in that real estate. And so it's not
Hmm.
bad. And one of the statements I say to a lot of people, that especially new people, the only people that want to be landlords are the people that haven't been landlords yet. It's a tough go, and so there are better ways to do that for sure. But so real estate investing really encompasses a lot of different strategies, if you will. But the key strategy in the reverse wrap is it's different, and the reason why it's called the reverse wrap is because I start with the buyer first. Everybody in real estate investing, for the most part, starts with the property.
Yeah, that's what I would
So
assume. So,
yeah, yeah. So the reverse wrap system to me is better because the statistics are that 70% of the people that want to buy a home can't qualify for a traditional mortgage. And there's many reasons why people don't qualify. It's not just credit, right? And so that's a
yeah.
massive untapped market out there. And so I take that approach of helping those people become homeowners. And once you connect with these people and you know their budget, you know exactly what they can afford, how much down payment they have, their monthly payment, their income, and all of that. And like I said, credit's not always the issue. Underwriting guidelines, they underwrite a whole lot more than credit with these mortgage companies. So it's really a package that's happening when they're being underwritten. It's job tenure. It's credit does play a role in that. Yeah, it's self-employed people, I would say, would be at the top of my list of clients, because many self-employed people, right? They own businesses, and we all want to minimize our largest expense in life, which is taxes. So we write everything off. And at the end of the
Yeah.
day, you want to go buy a home for your
Which can
family, and
show.
you go. You write everything off, so your net
Yeah.
income is what they calculate your debt to income ratio off of. So, sorry, you don't qualify. But they're sitting here renting a $5,000 a month house or a $3,000 a month house, and they're making that payment like clockwork. But on paper, it shows they don't have any income, and there's no forgiveness for that. So there's a strategy that takes 2 to 3 years to prepare that person to become a homeowner in that situation, and their tax liability, their tax situation is going to go up. The reverse wrap system will minimize that, and they can become a homeowner today instead of someday, is what I say. You can own a home today, not someday. And
Yeah.
so
So
that's
I know, yeah, sorry. So I know we're at the lowest home ownership rate in U.S. history. What do you think is causing that crisis in the real estate system? Is it because people don't, it's just so hard to qualify, they can't qualify, or like you said, like people that are self-employed like myself,
I think there's a lot of factors, right? I mean, home prices have skyrocketed over the last several years. Uh, but that gives safety in real estate, right? Because they're going to continue to go up. There's homes that are $1 million now that 10 years ago you'd have said that's $1 million home and people would have laughed you off the street. Um, the truth is that there's ebbs and flows and ups and downs in real estate, but at the end of the day, you can take any 10-year period in the last 100 years, and in that 10-year period, real estate has gone up, right? I know when I was a kid, $100,000 house was that was the rich people, right? And now you can't even find $100,000 home. And again, that was,
yeah,
40 years ago. But at the end of the day, that's the reality of real estate. So becoming a homeowner now is important, because if you have to wait 2 or 3 years, you're likely going to pay more. I think interest rates right now, for
yeah,
sure, play a role in home ownership rates going down. So a lot of it is affordability, but a lot of the
hmm,
affordability comes from people not qualifying for mortgages. Your top tier people apply and get top tier mortgages. But at the end of the day, too, the Black Rocks and big corporations of the world, these investment firms, have bought a lot of houses and are really, turning us into a nation of renters. And I have a
yeah,
strong desire to create homeowners in America. I don't think these large companies deserve to be able to buy these properties in the down markets, right? And then lease them out over time. And then in some
yeah,
cases, they'll sell them, and hopefully they do, so we can get more home ownership. Um, During the
yeah,
crash,
yeah,
08, 09, 10, those years, there was no money out there for builders to be able to build homes, but the population still grew. And so the demand for housing increased dramatically, but the supply diminished dramatically. So when you have those factors,
yeah,
that drives pricing. And so we had a few years there of massive building, but it still didn't catch up to the demand. And we're so far behind right now on demand that another building boom is coming. And another price increase. I mean, it's hard to imagine that houses are going to go up from now, but they are. They're going to continue to increase, and especially when interest rates drop. And I think we all expect that to happen in the coming year or two. So, and
yeah,
building is going to increase. The current administration and even municipalities and counties and states are putting a large drive behind affordable housing and building more housing. And so that's just beginning again, like it did, 10 years ago. Uh, so uh,
yeah,
when I say the best time to get in real estate is right now, right? We know it's going to go up.
yeah,
And the other thing
yes,
is as a real estate investor, we're taught to buy low and sell high. So when we're in kind of a down market right now, it is the best time to get in, because we know that it's going to do that ebb and flow again. And so in any business, you're taught to buy low and sell high. That's how businesses make money. So from a real estate investor standpoint, now is the best time to get in that I've seen in since the 2010 2011 time period as far as a buyer. So but yeah,
yeah.
that's kind of the answer.
Yeah, so how many Americans do you think actually have like the income and down payment but can't get a traditional mortgage right now? Would you say that's a pretty large chunk of people?
I would say that, like I said earlier, 70% of the people can't qualify for a mortgage. There's a percentage of those people that don't have the money, right? I mean, it's just that simple.
Yeah.
But there's a huge supply of people that do have down payments. They've sold other houses, moved to new locations.
Hmm.
They've got equity that they built up and sold and that they've saved to try to get into another home, or they're starting a business or something like that. There is a massive part of that population that can afford a home and is ready to put down 10, 15, 20, 30, 40, 50%, and a mortgage company won't even give them a loan. I'll tell you a story. There's a gentleman
Hmm.
that moved here to Colorado, and he was a realtor in California. And of course, you can imagine he had equity when he sold his home. He's 20, 25 years in California as a realtor, successful realtor. And so he sold his home and moved to Colorado and was going to, pick up his business too and become a realtor in Colorado. He had 50% down on his house,
Oh,
and
that's
he
crazy.
couldn't qualify for a mortgage because even though he was going to be in the same field of work as a realtor, the underwriter said that he didn't have the history of success in a new location to qualify for a mortgage. So they turned him down. We got him a house
Wow.
within, 2 weeks. In fact, he got pre-qualified on the mortgage, but as because he had good credit and he had a good down payment. But pre-qualified is different than qualified, right? Then you got to go through the underwriting once you
Yeah.
choose your house. So once he chose his house and they do the full underwriting, pay for the appraisal and all that, we actually ended up getting him in the exact same house that he got turned down on a mortgage from. But that's just
Wow.
one
Well,
instance right there of somebody not qualifying for a mortgage.
yeah. And how many people do you think you've been able to help qualify for a mortgage and get into a home through
Oh,
this
in,
type of
in
system?
my career, I started doing this program, the reverse wrap. I didn't call it the reverse wrap in the beginning, right? I mean but that's what it is. And in my career, I've helped over 1,300 people that could not qualify for a traditional mortgage become a homeowner, and I'm proud of that number. And so I'm teaching other
Yeah, no.
people how to do what I do now because I want to magnify that. I mean, if I do this for another, you know, 25 years, which I hope to be doing it for that long, I love what I do, so I have no desire to retire. But I need to multiply what I'm able to do because I just want to make that impact, right? And so the only way to do that is to teach people how to do the reverse wrap system and go help these folks. And I'll tell you, you make good money doing it, but it's gratifying. I can't tell you how many tears have shed from people that are just happy tears that they're so thankful that there's a program like this out there.
Yeah.
So
It's funny to say that because when you think about like real estate investors and landlords and stuff, and you tend to think of them as kind of like sharks. Like they're pricing out of the market, or the rent's really high, or it's just they're trying to squeeze out as much profit as they can on each deal, and they don't really care about the people that are buying the homes. But this is kind of the exact opposite, because you're really kind of helping people get into a home that normally wouldn't be able to qualify for a traditional mortgage. So you get like the benefit of actually being able to help people and families to get into homes, but also create an opportunity for yourself to make money in addition to that. So it's a really unique system. That's why I wanted to get you on the podcast and talk to you about it. Um, do you think most real estate investors can adapt what they're doing right now, and kind of reverse what they're doing, and get into this and make a run of it? Or
well, there's no doubt. And I mean, you mentioned something there that real estate investors, the way I label that, right, is they're too focused on their profit. You can say what you want. It's
yeah,
not the real estate business to me, it's the people business, right? We're in the people business. And if you focused on the real estate and if you're focused on your profit, you're not going to have long-term success. It's just not going to happen. It's not the way to operate in business. You have to be focused on people. You have to be focused on service. You have to be focused on their outcome, right? And truly helping these folks. You don't want to take somebody that truly should be in a $300,000 house and put them in a $400,000 house. And a lot of investors will do that. They're setting these people up for failure, right? And I
yeah,
teach heavily on making sure that we're not putting people in a position to fail. The reason I want to increase home ownership in this country is because that's roots, man. It's when you're renting, if you want to paint your boys' room blue and your girls' room pink, you can't really do that in a rental unless you want to put it
right,
back when you're done. And if you need to do a room addition or build a deck or make it yours, you can't do that in a rental property, and you have no
Yeah.
stability there. If the landlord decides he wants to sell the house, or she wants to sell the house, I'm sorry, you got to move at the end of your lease, or I'm going up on the rent, or there's so many different
Hmm.
situations. So giving people the ability to have those roots and to set those roots down and have home for their kids, that they know that's going to be their home next year and the year after, and put them in a place where they can
Yeah.
build equity and sell that home and upgrade if they have more kids, or when their kids graduate and move on and then become empty nesters like my wife and I have, and be able to sell that
Yeah.
house and capture that investment that you put in there and downgrade in a home. And so um, other real estate investors, they really are focused on the real estate. They're really focused on buying it here, doing this to it, selling it, or focused on that tenant situation. And again, they're going to stay with the trends of the market rate for rentals. So
Yeah.
I think any real estate investor will have far more success if they focus on the people, if they focus on the service, if they focus on their community and truly helping people. There's no question in my mind that their success level will be far greater. And it is rewarding. Helping these people it's financially rewarding, but it's rewarding to your heart, right? It's rewarding that you're able to help these folks. And I mean, I'm friends with a lot of people that I've helped, stayed in contact with them. There's been a couple of unfortunate situations where we had a natural disaster um,
Hmm.
that didn't affect the home that the client was buying, but it affected both the husband and the wife's place of employment, where they immediately lost their
Hmm.
jobs for a long period of time, like 9 months, and they couldn't make their house payment. And I tried every way that I could to
Yeah.
help them. But at the end of the day, you you have to still be able to make your payments when you're owning a home, right? So I helped
Yeah.
them get out of that
Yeah.
house. They did have to go rent for a period, but a year and a half later, they came back to me and I got them another house. What mortgage company would even give them the opportunity to own a home after coming out of a situation like that where they got blindsided by a natural disaster, and no, they got behind on their
Yeah.
mortgage, and so it affected their credit. So, and then and give them an opportunity a year and a half later, that doesn't happen. But with a program like this, it
Yeah.
does. And I can't tell you how thankful they were, both for me assisting them in getting out of the situation they were in, getting them into a temporary rental. Well, a year and a half, not super temporary, but it was temporary for them,
Yeah.
getting back on
Temporary.
their feet
That's
and
pretty.
becoming homeowners
It's a pretty.
again. What'd you say, Robert? I think we had a
Yeah.
little cutout there.
No, it's fine. You're. I'm not sure if it's going to show up in the video or not, but there's a little bit of lag sometimes, and it's a little spotty here and there. But I think it should be okay. But so with the reverse wrap, can you kind of explain like how is the reverse wrap different, and how do real estate investors make money with that as opposed to like just buying and flipping a property?
Well, focusing on the buyer. There's so many leads out there and so many people that need this service, and nobody's focusing on them. Nobody, real estate investors as a whole focus on them after they get the house, right? So they've got a house that they're put on the market, and they need to find that right person for that house. So
See,
they
uh,
attempt to do seller. Say it again.
is that so you find the buyer first and then the house, and then how do you
Correct.
find that? Does it kind of include like how to find like the right type of property for them that you can still make money on, or how does that work?
Right. So we do a home buyer presentation, and the one thing that I love about this is we're full disclosure on everything that we do. So we tell the buyer exactly what to expect through a home buyer presentation. We show them the program, how it works. They understand that we're in this business to make a profit, but it's a fair profit. And so we lay it out in front of them exactly how the program is, or the process is going to be, and they agree to it and say, yes, go find me a house. I want to be in this school district. We want a pool. I need um, for a commute reason, we want to put it here. And because my wife works here and I work over here. And so you nail down location, size, price range, bedrooms, bathrooms, all of that. So you know specifically what you're looking for. And
Yeah.
if I go and find a deal on a property that fits what they need, they commit to it instantly. And there's a predetermined profit margin in the deal for us as an investor finding those houses. And here's the thing that most investors do, right? They'll go and negotiate the deal and buy that house at a lower price than even the asking price in some cases. If that happens with us, we're full disclosure. We pass that discount on to our client as well. So it's not something that I got it $20,000 below asking price, so I just made an extra 20 grand. No, I will make the percentage of our profit on that discount. But at the end of the day, we pass that on to the homeowner. That's serving. And when you help people like this, you get referrals from, I can't tell you how many referrals I've gotten. My business actually runs on referrals more than it does marketing, because when you help
Yeah.
people and you're creating service, you get tons of referrals. And I get referrals from people from 5 years ago. I'll get a phone call because in my contact, and I'm like, I hadn't heard from them. And hey, are you still doing that thing? I sure am. Well, man, I gotta, so it's just serving people. That's the thing. But finding the buyer first gives you an absolute target of the property that you're looking for. And there's all sorts of different methods in how to acquire those properties, from just straight buying them to creative financing and all the other alternative creative methods. And there's other
Yeah.
investors out there, right? The ones that are hunting for properties continually that are looking for these buyers. So when you have a buyer, you have a
Mhm.
massive position when it comes to negotiating those deals, because you're not just looking, you're buying. And so that
Yeah.
gives you massive
So Shane, do
confidence.
you make money on? Yeah, Shane. So do you make money on the interest as well? So like you're basically acting as the bank, right? So you're buying the property, and then you're
Yes,
acting as the bank and writing the loan to them. So you're making the interest money as well. In
that is
addition to
correct.
like a settlement, right? Okay,
That's
that's
correct. So
interesting.
it's,
And what
yeah.
type of percentage?
Well, it varies, right? Okay, so and that's what the home buyer presentation does. It shows them the boundaries and it lets them know exactly where they're at, what they can afford, and so it does vary, right? Because the acquisition on the home, uh, because there's different methods for us to acquire the homes, so it varies. That's the real answer to it. So it's hard to say, but the home buyer presentation to the home buyer gives them all of that information so they know exactly where they stand. It's not some random number that they're surprised with. They know from the day they sit down in that home buyer's presentation until the day they sign the papers and close. There's no surprises. It's full transparency.
So what happens if like somebody buys a house and then something happens and they can't make the payments? I mean, are you having to evict them or do you have to, are you evicting them or are you foreclosing on them?
Well, I'm
I know
proud
that's
of this
probably in the,
number. I'm proud of this number. Out of the over 1,300 people I've helped, I've done one foreclosure in 25 years. And that was because the person moved out and we couldn't find them. I've had a handful, maybe a little more than a
oh,
handful, maybe six, of people that got in the situation like I told you about a minute ago, right? Where they couldn't make their payments and I assisted them out of that situation. So yes,
yeah,
we we're here to help, right? Life happens to people. People lose spouses and have medical issues and jobs like we talked about earlier. And so life happens, and a mortgage company is not going to work with you. Yeah, there's such thing as loan modifications and things like that, but at the end of the day, almost every loan modification I've ever seen puts the person after the modification in a worse position than before they went in, other than the fact that they'll catch them up on their
yeah.
payments and move it to the back and all of that, but they change interest rates, terms, and all that. And the bank is the one that always benefits in that situation. And when we help people, we're on their side. We look out for them. We, that's just the reality of it. And so it's a different mindset, right? So yes,
Yeah,
the
absolutely. I
answer
mean,
is yes. If you can't pay, you can't stay. But we don't have to
yeah.
make it a negative situation and foreclose on you and boot you out and do all that stuff. We want to provide solutions. You might have equity where you can downgrade and get something smaller. You may need to do what these other folks did and go rent temporarily. Um, there's all sorts of situations. So, I hate to speculate, but like I said, out of 1,300, there's not a bank out there that's in 1,300 deals has one foreclosure. So I'm very
Yeah.
proud of that.
Yeah. So let me ask you this. So if, from what I'm getting from this, the reverse wrap would kind of be best for people who are normally looking for like rental properties to rent out to people. But instead of renting, you're helping people purchase the home. You're basically buying the home, financing it, and then getting them into it. And really, I mean, if you look at that, that's a lot better than renting a house to somebody because, you're having to take care of the AC if it breaks down, the electrical if it breaks down, anything that happens to the home, like you're liable for it. But if you're buying or if you're selling the house to somebody, they're responsible for all that stuff, and that kind of makes your life a lot easier. Where you're not a traditional landlord and you're having to do all those things. Is that right?
That's right. I mean, I'm looking at it because I'm hearing your question, and part of that question really is for the home buyer, right? And the other part is more for the investor side. So let's speak from the investor side.
Yeah.
Yes, you're absolutely responsible for the repairs on the home as a landlord, right? Dishwashers, washers, dryers. Here's the way I paint it, right? I teach my investors
Hmm.
that the more moving parts in any investment, the higher the risk. And every piece of a house is a
Yeah.
moving part, from a toilet to a sink to an appliance to the roof to the carpeting to the paint to the gutters, the air conditioner, all of those. So the more you add to the moving parts, the higher the risk. But from an investor
Yeah.
standpoint, there's only one mechanism. There's only one moving part in the reverse wrap deal, and that moving part is a note, right? And a mortgage, and they're tied together. It's two things: a mortgage and a note, or a deed of trust and a note. But those things are connected together, and so all of that liability of all those other moving parts shifts from the investor side over to the homeowner side. And so
Yeah.
that's another reason that we make sure that we're putting people in a position to succeed. If we're pushing their debt to income limits to what the maxes are, then we suggest, and we don't make it mandatory, but we suggest and we try to put home warranties on things. So if they don't have a large savings account to help them out of a situation like that, that they've got their dishwasher goes out or the hot water tank or the air conditioner or something like that. I mean, homeowners insurance covers the physical damage, if from fire and hail and all of those car hits your house, whatever that looks like, right? But all of those moving parts, there's maintenance that goes on, and so we recommend that them put, and we're aligned with home warranty companies that'll do that for them, and we get discount rates that we pass on to our clients. So, but yeah, that's the biggest thing from that side of it. From the real estate investor side, is you just got one moving part, and most
Hmm.
landlords also hire management companies, and there's a fee associated with that, right?
Yeah.
To pay them to handle the maintenance, to collect the rent, and to send late notices and do all that stuff. Well, in this situation, we use a servicing company. And so I know many people have closed on a home before, and you'll make your payment for 2 or 3 months, and then you get a letter in the mail that says, now make your payment here to a servicing company. Well, we do the same
Hmm.
thing. 100% of our deals are handled through a servicing company. So they're escrowing the taxes, the insurance, they're handling the 1098 forms, which what a 1098 form is, everybody's heard of a 1099, that's money received. But when you're paying rent,
Hmm.
you have to pay your taxes first and then pay your rent out of what's left. But when you have a mortgage, you actually get to deduct the interest that you paid on that mortgage from your income taxes. So there's a
Yeah. Okay.
form associated with that. When you have a mortgage, you get a 1098 form that tells you at the end of the year how much interest you've paid. Well, the servicing company handles all of that for us. They make sure that that client gets that 1098 form so that they get able to write off the portion of their taxes that they're able to write off. And so that's a significant difference. If you're paying $2,000 a month for rent and you're paying $2,000 a month for a house payment, it's not the same, because you get money back, or you get to deduct the interest. So you get more income, more disposable income as a homeowner than you do as a renter. And so that's a huge advantage as
Yeah.
well.
Okay.
But the nice
So
thing for
the
the
course that
investor,
you created, the reverse wrap, like, how long does that take to go through it? And then kind of what's included in the course? Is that, a couple months, or is it, I have no
it's
idea.
8 weeks. It's an
Oh,
8 week course. Yeah,
okay.
it's 8 weeks. And so we go through it methodically. I do, hours and hours of Q&A, and then I coach them afterwards as well, because I don't want somebody just to buy my course and set it on a shelf. I want to support them. I want them out there helping homeowners get into homes and make money doing it. They'll love their life. I'm just telling you, a normal real estate investor, and I've been there, I've done it. You're constantly chasing
Hmm.
deals. You're constantly, I mean,
Yeah.
everything from, what do they call it, driving for dollars, where you're looking for dilapidated houses that you can buy at a discount and bring up to standard and sell. You're constantly
Yeah.
calling realtors and chasing people, and the I buy ugly house guys, and wholesaling and all of these other strategies. And I've done all those things, and it is a grind. You're constantly working. I love being a real estate investor, and I started my career that way. I started doing that. I had a full-time job doing it, and I started having success, and I quit my job thinking I was going to have all this freedom, right? Well, the truth
Right.
is, that didn't happen. It
Yeah.
wasn't until I learned how to do the buyer first, and I learned it from a gentleman in that I just stumbled upon. I was educating myself. I was going to seminars and boot camps and all that, and learning strategies. And some of those boot camps you'd get a nugget out of, and some of them, are just garbage. But at the end of the day, I still put myself out there because that's the life that I wanted to live. And when I finally quit my job, that was in 1996, November of 97. I quit my job, and I haven't had a job since. I've been a real estate investor since that time. And when I quit my job, I thought I was going to have all this freedom. Well, I was self employed. I could leave town when I wanted to and take vacations and didn't have to check with an employer. So there was some freedoms that came along with that, but I busted my butt, man. I was working hard and I was doing
Yeah.
well, but it was a grind. And if you stop working, your income stops. I mean, you gotta, so when I learned of this buyer first method or strategy, it was from a gentleman that I paid him $5,000 to learn it, right? And uh, his method was completely different. It had the home buyer presentation start with the buyer first, and I was skeptical, but I started doing it, man. And I'll tell you something. The referrals started happening, and I became known as that person that could get you into a home as an owner, not a tenant. And my business just exploded and took off. And that's when I really started having freedom, because the transactions themselves, that's simple.
Hmm.
It's,
Yeah.
I mean, any real estate investor that buys property first, they always have to have a buyer. And that property could sit there 30 days, 60 days, 90 days, six
Yeah.
months. And you talk about eating away your profit and sleepless
Yeah.
nights, you're that's a problem. I
Yeah.
mean, and it becomes a problem. And I've been there. I've had it happen. And now you're discounting it or taking a loss, and that's part of the learning process. But when you start with the buyer
Yeah.
first and you prepare them with this home buyer's presentation so they know exactly what's going to happen and they're ready to go, they've got their down payment set aside and they're ready, then you
Hmm.
you go find the property, because that's the part, it's just a detail, right? Finding the right property for them. And once you find it and they look at it, it's not like they're hem hawing around. They send the earnest money same day. This is it. This is our house. We want it. You use their earnest money as a real estate investor to tie up the property. And then they have
Okay.
they send their down payment to the title company 48 hours in advance. So you're not even using your own money in this strategy. You've got your buyer's money and they're happy to send it. And they know that it's got to be there. In fact, the entire home buyer presentation just lays it all out for them. So there's no surprises. They know exactly what they have to do and their money's safe. If something happens and the inspection on the house comes back and then they back out, they're not going to lose their money or anything like that. So it's extremely secure. It's perfected. I mean, it's truly perfected. 25 years I've been doing this.
So, what would be like your ideal investor? Like, what type of investor is going to do this? Do they need to have like all the money in hand to pay cash for these houses minus whatever the deposit is, or
No,
are there other ways to finance the homes? Like,
no, not at all. Um, that's not the case at all. You don't have to use any of your own money in these deals. There's a little bit of marketing expense in the beginning to kind of get going, and then once it starts flowing, that really is minimal, and it's really not even worth speaking about because how many people have $30,000, $40,000 down that are like the gentleman that I talked about earlier that is pre-approved
mm-hmm.
and then goes through the process of underwriting after they put their earnest money down on their house and they get turned down all of a sudden, right? That exists
Yeah,
in every community across the country every single day. And those people, I mean, they're planning a move already. You know, you get their
yeah.
hopes up. That right there alone is one way to get buyers. Those, yeah. So as far, and I guess I got sidetracked. Ask the question again, Robert, because I got off over to the side.
Yes, and like, so let's say I'm a real estate investor.
Okay.
Like, what do I
Yeah.
need to have in
Well,
order to do the reverse wrap system? Like, what
well, I'll tell you this. You know,
you're breaking?
new, and I'm breaking up. Can you hear me now?
Yeah, maybe you just
Okay.
start. Yeah,
So, you know, new investors do pretty good at this because they don't have any bad habits, right? They just come in, do what they're told, um, and go and give homebuyer presentations to these people, and they have people raising their hands saying, "Yeah, do that for me," and then it's like, "What do I do?" You know, and we teach them all of that. But so they have it's breaking bad habits, right? I mean, there's a lot of investors out there that just believe that they have to start with the property first, and they get excited when they come across a good deal on a property, but the excitement shouldn't come until they actually sell it, right? It's said in real estate investing that you make your money when you purchase a property. And that's true because you've got to get
yeah,
discounts and things like that. But you don't collect that money until you've actually sold the property. And the period of
binder
time,
for it.
a lot
Yeah,
of times between those two things is stressful. You know, I mean, every now and then you'll get a deal where you buy it one day and it's sold the next. Well, that's exactly what this is. These houses that we're going and acquiring for our home buyers, they're already bought. There is no
yeah,
holding costs. We close the exact same day. So we're using our buyers' earnest money and our buyers' down payment to close these properties, and we're making spreads on those. And they close the same day, same exact day, and move in usually right then. So there is no vacancy. There's no holding cost. Your cash flow from the payment starts the very first month. No advertising, none of that other stuff. So real estate investors aren't used to that. So experienced investors, once they get a taste of this, like I did way back when, you don't ever want to do deals another way again. I still do fix and flips here and there, but I'm not out searching for them. They kind of fall in my lap. You know what I mean? And so I'll still do some of those deals here and there, but I don't search for them. I don't look for them, and it's got to be the right deal. And I'm able to say no. And
yeah,
most real estate investors are trapped really in what I call feast or famine mode. You know, you can close 2 deals, 3 deals in a month, and then you don't close a deal for 2 or 3 months. And yeah, those paydays are nice sometimes because you get a chunk of money, but
yeah,
you better be able to budget and understand that business. And with this buyer first
yeah.
method with the
So
reverse
I've got
wrap,
a
it's
probably
consistent.
stupid question for you.
Okay. There's no such thing as a stupid question,
Yeah,
Robert.
so I gotta. Well, this might be pretty stupid, but so I guess one disconnect that I have right now is when let's say I want to use a reverse wrap. We find a deal for the buyer. They put up their deposit. Where does the rest of the money come from me to do that deal? Do I get financing for it, or do I put up my own capital to make up the difference between the, the house and what their deposit is? Could
Oh,
you kind of
so
explain that?
yeah, so there is creative ways to do real estate deals, and when explained properly to the seller on the other side, it's you almost get
Mm-hmm.
told yes every single time. Now, there's times when they say no, I don't want to sell my house that way, and we have to do something different. But like I said earlier,
Mm-hmm.
I have a group of investors that will step in and pay for a house and then sell it to my buyers with seller financing attached to it. So
Okay.
we don't really, we
Well, that's good.
rarely have to tap into that, but it's something that we can do. So there's occasions where we have to go back to our buyers and say, guys, we're going to have to pick another
Mm-hmm.
house. But something's funny about this, or not funny, but I can tell you, and I'm not saying 99% of the time, I'm telling you 100% of the time. When people put their earnest money down, they have their hopes up for this house. And then if something happens and I have to go back and tell them, sorry guys, we got to find another house. And I tell this story when I tell them this, and sometimes ahead of time, 100% of the time that that's occurred, and they end up finding another house, they come back to me and they say, we are so glad that that deal fell through on the other house because they find something. And that's just how life
Yeah.
is sometimes, right? There's some letdowns in life, and that does occur. I'm not going to sit here and say it doesn't, but I can tell you with certainty that 100% of those folks are thankful that it happened and they end up in a better house, better location, better situation every single time. So, good question. So, yeah, that can
Okay.
occur, but it's not common. It doesn't happen often. I'd say 1 in 20.
I got you. Yeah. So, what would you say is a common problem that comes up in these deals that, or in a traditional deal that wouldn't come up in this type of deal with the reverse wrap?
To be honest with you, they're easier to close than traditional deals. When you're doing a traditional deal, you've got in most cases, two realtors involved, buyer and seller. Buying agent and selling agent. You've
Yeah.
got a title company, which we use title company. That's kind of a misconception. I'll come back to this in a second. But you've got a title company, you've got an appraiser, you've got a an inspector, a home inspector. So
Mm-hmm.
you've got all these moving parts again, and they're time consuming. You got a mortgage broker, which, by the way, a mortgage broker has the hardest job of anybody in the entire real estate process. Harder than the realtors, harder than that. You talk about earning their money. A mortgage person earns their money. That is a tough position because they're coordinating all this stuff, right? But at the end of the day, we just simply have a transaction that there's not an appraisal required unless the buyer wants an appraisal. If they want to make sure that that house appraises, they can. If they're comfortable with the price, we don't require an appraisal. Um, the
Okay.
always title company. The one advice I'll give to every home buyer, every real estate investor: don't close a deal, period, without a title company. That is our protection. A lot of people think that real estate agents are there as protection for us, right? That they protect it. They don't. They simply take a contract and take it to the title company, and the title company does the title search, make sure the taxes are prorated and counted and all that stuff, so make sure that a clear title goes from that seller to that buyer, and
Yeah.
ensures that if they made a mistake and somebody comes from the history of this property and makes claim, that you've also got title insurance that covers that claim. So out of all of my advice that I would give to anybody, you don't need a realtor. And I'm not saying don't use them, because I work with realtors all the time, but a realtor is not necessary to provide security to their buyer or their seller. The title company is the protective entity. They're licensed, they're governed, And that is the entity that protects all parties. And in fact, lenders too, right? You know, lender sends the
Yeah.
money to pay for the seller, to pay the seller for their house to the title company. Well, until the title company gets all the right filings and signatures and all that stuff, that money stays at that title company. And if something doesn't happen right, they send it back to that lender. So that lender's completely comfortable sending that money to them and then releasing it to the seller. So it's the title company that gives that protection to everybody. But truthfully, these transactions, I can close a transaction like this in 4 days. Where if
Uh,
there's a mortgage company involved, um,
yeah.
30 to 45 days is the norm, right? So,
Well, yeah.
yeah, we can do these quite quickly. So I would say it's easier. And we have legal paperwork that's looked over by attorneys. We do everything by the book. We don't cut any corners or do anything like that. You want to get bitten in business, go try to do this on your own and not use professionally, legally drafted and proper paperwork and close with title companies.
Yeah, no, that makes sense. I mean, and then too, like having a solid system in place with somebody that's been doing this for so long, and you kind of already worked out all the kinks in the entire system. So it's like, you spend whatever it costs for the course, but man, that knowledge is invaluable when it comes to putting the deals together, finding the buyers, strategizing the deals, doing the paperwork on it. I mean, that there's a lot that you got to know that you probably don't know going into it. Even being a seasoned investor, I think you wouldn't really be able to figure everything out without having.
I've not seen it all, Robert. I can tell you right now, I still learn every single day. There are
Yeah,
things that pop up that's like, what? But hey,
right.
just move forward. You take things as they come and I've learned a lot over the years and I'm still learning. But truthfully, there's no two real estate deals alike. For the most part. There's
Yeah.
always something, there's always dynamics, right? You're dealing with people's lives. And I'm extremely cognizant of that. You got to realize that when you're in a house transaction, you're not just talking about the one family you're helping. There's somebody in most cases moving out of a house and they've got to move.
Hmm.
And then the
Yeah.
house they're moving into usually has a move attached to it. And that's a chain effect from both directions, even
Hmm.
behind my buyers. If they're moving out of a house, somebody's probably moving in, whether it's a rental, whether it's a purchase, it doesn't matter. So it's a huge responsibility to make sure that you do things as timely as you can and you stay on these timelines. But timelines get screwed up all the time and things
Yeah.
happen. And you got to recognize that you're not just affecting this one family, this one person, that chain effect. And the one thing I can say for sure is if something like that occurs, don't
Hmm.
hide the communication. Get it out there immediately. And yes, people get upset
Yeah.
and I mean it just happens, but the honesty of that and then trying to cover it up and you find out a closing is going to happen 5 days later than it's supposed to. And I see people all the time, realtors, investors, well, I'll just let the title companies tell them on the day. No, 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 no. You're affecting many people's lives. You get on the phone, you make it known, and you let everybody know, and you just apologize. I mean, it's out of your control. I mean, I've never delayed a closing, but I've had them delayed, for outside reasons.
Yeah.
Communication, right?
Yeah.
You got to shoot people straight for sure.
Yeah. Absolutely. Well, I like about the way that you're doing it. I mean, it's really, I think it's better for the homeowner. It's really working in their best interests, and it's not you're not like some shark coming in trying to screw people out, of their money and stuff. And I really think it's a better way to do it, and you're really providing a service that's great for the homeowner, where they couldn't normally qualify for a mortgage, and you're getting more people into a home, but there's still a great opportunity for real estate investors to make money. But if helping people is a big part of your life, this is definitely the way to do it. I think because you're able to help so many people get into a home that
I
when it.
look at it like I look at it like this, right? There's is a home buyer going to have to pay a little bit more to go through this program than if they qualified for a mortgage? Well, sure they are, right? I mean, that's part of the program. It gives that's what gives us the ability to do this for folks, right? We got to make money, but it's not like we're
Yeah.
taking their head off. It's not like we're trying to take them to the cleaners. Um, and and truthfully, what I see with most turn downs in mortgages, they tell people to go do this, and it takes a lot of times a year, 2 years, 3 years to go do that stuff. And the opportunity that these home buyers miss, they're going to pay far more in a
Yeah.
year or 2 or 3 years for the property. So it's better to go ahead and become a homeowner now. Still
Mhm.
do those things because the interest rate is a little bit higher on these deals. So
Yeah.
still go do those things. And do you know how much easier a refinance is for the home buyers than a purchase? And so we don't just get our folks into houses, we help them refinance these houses as well. We work with them and teach them the things that they have to go through so that they can go and drop their payment. And I've literally dropped people's payments in half um, before and helping them. And say you're paying $3,000 for a mortgage today and you can pay that payment and you go pay that for 2 years and you're in the house that you love. And then all of a sudden in 18 months, you go and you refinance and you get your payment down $1,500. Now that doesn't happen every time, but we can absolutely drop people's payment. So you talk about putting somebody in a good situation when you've got a debt to income ratio that you're working with, and that's, in many cases that's not going to change unless they have a profession change or get a raise or
Right.
something like that. Their budget is their budget. But you get them in a debt to income ratio, get them in a house that that they can afford, and 18 months down the road you drop their payment $1,000. Do you think that doesn't change people's lives? And now they've got
Well,
equity because instead of waiting for 2 or 3 years. So
yeah.
that, again, that gives you a good feeling too as an investor.
Yeah. Absolutely. Hey Shane, this is about as much time as I can take today, but I'd love to get you on another call if that's okay, and just kind of pick your brain some more. Maybe tomorrow. Does that work for you?
It does. I tell you what, the more people that hear this, both home buyers and real estate investors, the better. So, Robert, I'll join you anytime. And I thank you for
Yeah.
having me on.
A lot of people. Yeah. Well, I think a lot of people that watch my channel, with launch Sherpas, a lot of them are real estate investors. They're looking for, a startup in real estate. And that's why I wanted to have you on the show because, we've got a relationship already. We've done some stuff together. I know you're a person of integrity and you've really got a great system that's helped a lot of people get into a home and so I think this is great for my audience and it's great for people that are looking for an opportunity to either get into real estate or to do real estate a little bit differently. And I think you solve a lot of problems in the real estate industry for investors and for homeowners. So yeah, I mean, I think it's a win-win for everyone. But I'll definitely leave a link to your course where people can find you and find your course if they're interested in taking it. And I appreciate you hopping on this call with me. I know it was kind of last minute, so I'm grateful
That's
that you had
okay.
time
I'm
to do it
grateful.
and having you on the show. So thank you so
Well, I'm
much.
grateful for you, Robert, and I really do appreciate it. It's an opportunity for me to just get it out there, help more folks, and get more folks helping more
Absolutely.
folks. Right? We're going to increase home ownership rates in this country, and I've already done it, but to such a small level that now I just want to empower other investors and other people to learn this strategy, go out and create an incredible life for
Absolutely.
themselves while helping people. I mean, what better situation can you put yourself in? So, again, thank you, Robert, for the
That's
opportunity.
and any yeah. Thank you so
All right.
much. Thanks, Shane.
You have a great day. Bye
Yeah,
bye.
we'll talk. Bye bye.